Perfect. So thank you very much for all that have joined the webinar so far. So I would like to welcome you to this webinar that will cover the LIBOR transition and the overall impact and challenges with the benchmark reform, and as well as how Refinitiv and TraditionData are supporting institutions in accessing the new risk-free rates. So this webinar is co-led by Refinitiv and TraditionData. So I'm Nuneto, I'm the trading market development for Middle East and Africa, and I'm pleased to be joined by my colleagues, Jameson Blake, Business Development Manager from TraditionData, and Motaz Kamel, Proposition Sales Specialist for trading covering Middle East region. So before we start, I would just like to share with you some of the housekeeping rules. So you'll see at the bottom there is a toolbar that will enable you to have access to the different resources, such as the webinar materials, technical support, and also the Q&A box. We'll make sure that we'll address all the questions at the end. Feel free to write them in the Q&A box, and we'll allocate at least 10 minutes at the end to go through those questions. So we'll start briefly with just an introduction into the LIBOR reform by covering the rationale behind and the challenges, then moving into the alternative risk-free rates currently available, and how to leverage technology to gain access to this data in real time and power third-party systems. You will have the opportunity, as I mentioned, to post your questions in the chat box, and we'll address them at the end. So I think the first question that comes usually is why? Why do we need to, move away from LIBOR? And I think just as a measure of introduction, you probably are aware. So LIBOR is the reference interest rate, that supports more than $300 trillion worth of contracts that range from complex derivatives to, residential mortgages and corporate loans. The rate provides an indication of the average rates at each or which bank can borrow money from each other. So in the interbank, in particular currencies. So it's currently published in a range of currencies from GBP to dollar, euro, Japanese yen, and Swiss franc, and covers different maturities as well, all the way from 1 week up to 1 year. So LIBOR is really entrenched in our processes, such as risk management, valuation, accounting, and is also used as a performance benchmark for measuring returns. So the extent to which LIBOR has currently been ingrained in our financial world is quite extraordinary. Now, what has been happening that basically made LIBOR, let's say, obsolete or less relevant, right? So a panel of active local banks submit rates at which they will be willing to lend to another, from overnight basis all the way up to 12 months. However, as we well know, especially since the financial crisis in 2008, the interbank lending activity has decreased significantly. And with that, also the submission process left the benchmarks vulnerable to manipulation or simply errors in terms of submission those rates from the panel banks. So I think the financial crisis in 2008 really exposed the LIBOR flaws, including the weak governance, the vulnerability to be manipulated, and of course declined by the insecure interbank lending volumes, and the fact that some banks actually withdraw from the panel of banks that submit their rates into the LIBOR. Now, as you are well aware, there have been some LIBOR scandals where some banks have been fined for manipulating the LIBOR rate. So since that, there have been an increased scrutinization and regulation to try to prevent that situation from reoccurring. And this included the Financial Stability Board publishing recommendations in 2014 for interest rates benchmarks to be strengthened and to be reformed. And as a consequence, in the following years, various regulators have announced plans to replace, in the short term, or complement IBORs with new risk-free rates. So I would like to draw an interesting parallel between the LIBOR evolution and Microsoft, which is quite interesting. So there is a quote from the governor of Bank of Canada trying to address or establish this parallel. Interesting enough, Microsoft was actually released in 1985, the first version, so Windows 1.0. Most of us by now use Windows 7 or 10. So each new version has been improved in functionality, and reliability, and security. Now, as you are aware, LIBOR was actually introduced in 1986, so more than 30 years. But since then, only one major reform has been taking place. And definitely LIBOR in its current form was never designed to support what became more than a $300 trillion market, right? So with that in mind, with the current weaknesses in terms of governance and flaws and declines in liquidity in the volumes, they're basically translating to LIBOR, right? A lot of banks have used the current process to actually manipulate those rates, and that's why LIBOR is not as relevant as it used to, and there is a clear mandate to basically replace LIBOR with the new rates. So what is actual IBOR reform about? So the benchmark transition has been on the global agenda since 2014, but only in 2017, FSA announced that by the end of next year, 2021, they will no longer seek or persuade panel banks to submit quotes for the LIBOR. Make it clear that the reliance on LIBOR will no longer be assured beyond this period of time. And of course, LIBOR being regulated and administered by UK, but is actually used globally. So this discontinuation will have a global impact. So the financial services or the financial industry is migrating away from the LIBOR benchmark as we know it. So basically, most of the regulators are moving away from code-based benchmarks to transaction-based benchmarks that are a lot more reliable because those are based on actual transactions. And as a result, regulators and central banks already have announced and released a series of risk-free rates, such as SONIA in the UK, or SOFR in the US, or ESTA in the Eurozone. However, the timing of this transition from LIBOR to alternative rates vary from currency to currency, depending on liquidity in the particular market. For example, in the UK, the reformed SONIA is already widely used as reference for a lot of the derivatives contracts. SOFR was only, started being published since 2018, while ESTA has been published since October 19 from last year. So significantly more work is required to develop the market structure and liquidity, but it's quite clear that from 2021, end of next year, LIBOR will no longer be supported. So we need to actively move into the new risk-free rates. One of the key aspects also worth taking into consideration is central banks most likely will not provide terms for those risk-free rates. However, benchmark administrators, Refinitiv, and our partners are currently developing such products to support the financial institutions and our customers. So how are you currently impacted? How do we assess what is actually the impact? So as I mentioned, we need to understand where LIBOR is being used and also update the documentation and pricing methodology for existing derivatives or any other contracts that rely on LIBOR as a key benchmark. And make sure that new derivative issuance or new instruments are already using the new risk-free rates and not the IBORs. So all of that will have an impact on the different approach, the different conventions, the different pricing methodologies as well. So this reform could have a significant financial, operational, and legal risk if not addressed properly and in due time. So we look at treasury systems, middle office and back office processes that rely a lot on LIBOR reference, all the risk and valuation models, pricing models and conventions, not only from a valuation end of the portfolio valuation, but as well for new issuance. And of course, managing the related tax and accounting implications on contracts that reference LIBOR, and of course from a legal aspect as well. So there are a couple of questions worth asking to understand actual impact. Do you have any floating rate loans or bonds or any other financial instruments that currently use interest rates reference by using the LIBOR? Do you have any other funding arrangements that calculate interest based on LIBOR? Do you have any derivatives, such as IRSs, that have the floating interest rate using LIBOR? Or do you calculate market value of your financial positions, especially hedging instruments using LIBOR? So these are just some of the questions worth asking in order to identify the risks and then implement a transition roadmap to mitigate all the associated risks. Before I hand over to my colleagues, I just would like to basically share with you some of the work that Refinitiv has been doing. And for all of you that are currently Icon users, our platform, we have a dedicated page for the IBOR transition. So if you just type IBOR on your Icon search, you'll be able to see this application that has a wealth of information based on the new risk-free rates and the old ones as well, and all the news related to things. And you can navigate, to find the exact risk-free rates that have been implemented and the new methodology that's used for the calculation. And of course, you can then navigate into the specific rate. So there is a wealth of information already available. However, I will like to hand over to my colleague from TraditionData that will also be able to take you through how data can support you through this, change and reform. Jameson?
Thank you very much, Nuno. Thank you very much. Welcome, everyone, and thank you very much for attending this presentation today. My role is Business Development Manager at TraditionData, and it's really to ensure clients have access to accurate pricing when it comes to the OTC financial markets. Now, Nuno's spoken a lot about the reason why we're here, the reason why these rates are extremely important, but I think the most important subject from my perspective that Nuno raised was about the financial risk and what financial impact this is going to have on firms and their relevant exposure. And that's really where Tradition is forming a strong partnership with Refinitiv in ensuring clients have access to this price information. So to talk more about the package itself, we have formed what we understand to be the first broker data package, which is delivering forward curves, so interest rate curves that give clients transparency over what these rates are going to be at a date in the future. The package itself, it's exclusive to Refinitiv, and the trial itself, again, exclusive to Refinitiv. So what we're offering is access to ESTR, which is the European rate. So ESTR is a rate that's going to be replacing Ionia and Euribor. It's published daily by the ECB, European Central Bank. And what we've seen so far, it's a very new rate to the financial markets. So it started being published at the beginning of October last year. And from what we've seen so far, we've seen very little liquidity within the market itself. And that's, again, a really important point to mention when it comes to firms constructing their own curves. As well as that, the package contains SONIA, which is the replacement for sterling LIBOR. SONIA is published by the Bank of England. It's been around, it's not as new a rate as ESTA. It's been around since April 2018. And, you know, we've seen liquidity within that market, especially growing over the recent years. So again, we've got some highly accurate and quality pricing available for the stock SONIA. As well as that, HONYA. HONYA is the chosen rate to replace Hong Kong HIBOR. It's published by the Hong Kong Monetary Authority. And again, it's a fairly new rate. It came to fruition last year. And then lastly, but one of the more advanced rates again is SOFR, which is going to be replacing dollar LIBOR. SOFR is published by the New York Fed, and it's a secured rate. It's secured against treasury transactions within the financial markets. So that's the package itself, the risk-free rates package. You'll also see at the bottom of this slide, we have SARON, which is the Swiss LIBOR replacement. SARON comes in a standalone package, but is available via Refinitiv. It comes from our partner broker, Gotex. Gotex is the reference page for Swiss rates. And again, it's a truly high quality and accurate pricing data set, which you can consume. So to summarize, the package itself, ESTA, SOFR, SONIA, and HONYA are all included and all available. The markets that we're offering, so again, Nuno talked about the term rates that are available. Currently, there's a 30, 90, and 180 day term rate for SOFR alone. Tradition's pricing allows firms, again, to understand market risk at future dates. So you can access our pricing via our standalone icon page. That's available. It's free of charge for you to access and for you to view. If you go to TradRFR and then look at the quotes page, you'll see a list of the curves we have available. So again, we have OAS and basis swaps across all of these individual markets. Now, I've included an example of what one of the curves will look like. In a moment, we're going to go into more detail around the specific curves themselves, and also how we formed our data. That's, I think, one of the key strengths. But to give you, again, an idea of why we're here today. So Tradition has partnered with Refinitiv. We've brought to market this new risk-free rates data set, this package. We're also offering a free trial of this data by your Electron. So what that means is up until July the 27th, this data is readily available for you to stream in real time into your internal application. So whether that be, you know, Eurex, Fronterina, whatever it be, it allows you to, again, really understand the market risk and market impact of these new rates. So if you reach out to your Refinitiv team, so Maritas, we've got on a call who'll discuss in a minute, they'll be able to talk you through in more detail how you can get access to these rates. So let's look specifically at the individual rates themselves. So again, dollar SOFR, I mentioned at the start, it's one of the more advanced rates. It's been around since April 2018. And SOFR itself is a secured rate against treasury transactions. So that's a really important point. The reason being is Tradition has the leading brokerage operations within the dollar repo markets. So when it comes to formulating our curves, we use indications of interest, we use order data, we use transaction data to roll up and allow us to get, again, a forward-looking, a robust curve. Now, it's really important, again, we talk more about the dollar repo operations, because using that data also allows us to factor into our curves events such as end-of-month corporate tax days, end-of-month balance sheet adjustments, where you'll see an increase in the demand for cash. And with that increase, you'll also see volatility within the rates. So for those on this presentation who have been monitoring SOFR so far, you will see generally at the end of the month, you get a lot of volatility within that rate. And obviously with that volatility comes risk. So us using the repo data allows us to really try and give you a forward prediction of where that's going to be. And we've been quite accurate so far from what we've seen. Another point that's really worth honing in on is our market of the SOFR market. So there's an independent research house called Claris, Claris FT, and they run reports on the swap execution facilities. So they pull transaction data, they pull, again, order data from these CEFs. And what that's shown is year to date, the latest report was May, you can see this on their website. Year to date, Tradition has had circa 65% of the SOFR market, of the SOFR swaps market. So, we're a true player in this field. And again, this is all testament to the quality of our pricing. We also use data as well from Tradex. Tradex is Tradition's hybrid swaps platform. It's, again, a mixture of both voice and electronic liquidity. And again, we use data from that platform to formulate into our curves themselves. So you'll see here a list of the curves available. So you've got OIS SOFR. That's a forward view of where the OIS market is going to be, going out to 50 years. We also have the basis swaps. So that's really key for understanding the basis risk between previous rate and new rate. That we have, again, so you've got OIS SOFR versus Fed funds out to 50 years. You have OIS SOFR versus 1-month LIBOR out to 30 years, and OIS SOFR versus 3-month LIBOR out to 50 years. And then we also include as well in this package, we include the spread, which is between SOFR and the FOMC dates as well. And that's all available, again, I reiterate, free of charge up until July the 27th via your Electron system. Moving on, let's talk about ESTR. So ESTR, there's a very key and a very important date for ESTR, which is also July the 27th, which coincides with the end of the trial. July the 27th marks the day that the CCPs are going to switch their discounting curves from the previous rate over to ESTR. And that's a really good indication of where firms should be in their own discounting processes, in their own valuations processes. So because I mentioned at the start about the lack of liquidity within the ESTR market, we understand time and time again that firms are really understand or really struggling to construct accurate curves. So to battle this, what we do is we use the data from Tradex. We use the orders, the indications of interest, the transaction data from Tradex across the markets we have available to allow us to formulate our ESTR curves. So Tradex, for euros alone, the data set for euros alone contributes on any given month around 60% of the ICE swap rate benchmark, so the former ISDAfix, for those of you who are familiar. And again, really testament to the quality of the data that comes from that platform. In regards to the curves we have available, the curves we have available are OIS annual money ESTR, that's out to 50 years, OIS ESTR versus EONIA, which is out to 50 years, again, ESTR versus 3-month EURIBOR, out to 50 years, and then the spread between ESTR and the ECB dates, and again, all available via your Refinitiv infrastructure. Moving on to Sonia. Sonia's a more developed market. Again, been around since April 2018. We have a lot of liquidity. Tradition were one of the first brokers to facilitate trades within the Sonia swaps market. And we've been working very closely with both the FCA and the Bank of England in providing them an overview of the activity within the market. So very much similar to ESTR, the data comes from both our voice and our electronic brokerage. We use data from Tradex to allow us to get a true forward-looking prediction of where that market's going to be, a forward curve based on the interest rate markets. And then lastly, Honya. So Honya is the Hong Kong IBOR replacement. It's Tradition were the first broker to facilitate trades in it. We have over 80% of market share within the Honya market. And again, that data allows us to really have a robust, accurate interest rate curve available for you guys. So you'll see there are a number of different curves available, both interest rate swaps, both overnight index swaps and basis swaps available for consumption into your applications. Now, lastly, to summarize how Tradition can help in these fields, I guess one of the key strengths is that our data is independent. It comes directly from the market, so we source all of our pricing directly from our brokerage operations. And Tradition as a firm, we don't have our own exposure. We don't take our own positions. So it really is an independent view. Our clients range from banks looking to hedge risk, corporates, asset managers, pension funds. So a real mixture of liquidity, and that all forms up into the pricing that we can deliver. So truly independent. As well as that, you've seen that the transition, Nuno discussed previously, the transition to these new risk-free rates is going to have a real impact on the pricing and valuations of financial instruments that you have on your books. So whether that's, again, rate notes, whether that's fixed income, whether that's derivatives within your trading book. These are all going to be impacted, right? And there's a high importance for you guys to understand what that impact is. So to understand, whether it's, mortgages we were talking about earlier, all of the retail mortgages you've got, if they're linked, let's say at the moment to dollar LIBOR, if they switch over to SOFR, what's the impact? What's the basis risk of that change? Next, our data can be fed into applications, into systems such as interest rate calculations. That can be done seamlessly. Everyone on this call obviously has a relationship with Refinitiv already, and that means that we can seamlessly integrate this pricing into your applications, whether that's in real time, intraday, end of day format, a real number of different methods. Now, one of the key things that we've had a lot of interest in from market risk functions is the basis swaps. And again, getting access to what the basis risk is between the previous rate. So again, whether that's 3-month IBOR over to ESTA. Our forward curves will give you an understanding, again, of what that basis risk is at a date in the future and really help you understand what your exposure is going to be. We've talked again about illiquid markets and firms trying to construct their own curves. Having access to traditions pricing, which is supported by genuine interest within the market, really gives you a benchmark to build your own curves from, and again allows you to really understand where that market is. And because of the volatility that we've seen so far, there's been pricing gaps, there's been, we've seen crazy movements in these overnight markets. And that's why, again, having access to a true picture of where that market is going to be, again, rolls back into the importance of understanding your market risk. And going out, we've shown going out to 50 years or so. And then lastly, from my bit, this slide just covers, again, a wider overview of what Tradition can do. We've really tried to be a true player within the market data space. We've granularized our packages, allowing firms to focus on the data that's necessary for you guys. So let's say a Middle Eastern bank, which only wants exposure to Middle Eastern data, you don't have to license a wider package. We've got an EMEA emerging package, which just focuses on the currencies that are relevant to you. So again, that's a summary. I'll now pass over to Moritas, who will talk to you further about, again, integration of this data. Thank you very much.
Thank you, Jamie. Thank you, Nuno, and welcome again, everyone. First, I would like to thank Jamie and Nuno for the presentation and the introduction about the changes coming to the market, and also how our clients will be able to benefit our new propositions and the partnership with Tradition, providing the new alternative LIBOR rates. On my part, I'll be able to assist you going through the electron part, where I'll be able to cover what are the areas that we can provide as solutions and deliveries for benefiting and accessing LIBOR alternative rates and in general the risk-free rates and other data points from Refinitiv side. Okay, so since we are using a couple of terminologies on the technology side, there is one interesting term which is electron. And electron, before we start, I would like just to give you an idea about. So any client who would be interested to power the enterprise work from start to finish with a single consolidation platform feed, the answer would be always electron. So simply electron is a suite of trading and data solutions that powers the enterprise and client applications, where we'll be able to connect the global markets and deliver a low latency feed for more than 500 exchange traded and OTC markets. Along with the analytics and the distribution information, we'll be able to provide the transactional connectivity to support any financial workflow and applications from the client side. So in general, the electron real-time is a data delivery part where we have our unique platform and consolidation of the global data feed. And this actually had a high level of improvements on the accuracy and the quality of the information with our unique implementation of breadth and depth of the context that we always provide by Refinitiv and provide a step change in the latency by leveraging our unique distribution on the global architecture and the flexible delivery options. So how customers are benefiting from the Electron real-time? First thing that we have the unique breadth and depth on the information with a low latency. So we're talking about 5.5 million price updates per second, delivered in like less than 4 milliseconds in 40 kilometers radius. Plus we have a cross data collection distribution. We are able to provide this kind of normalized data. And also we have this kind of unique OTC and reference data are provided from our single feed or consolidated platform. In terms of quality, we have a unique quality of data provided through wide range of engines and data delivery. And we have different types of APIs and interfaces where clients will be able to build and use with seamless integrations and implementations from the back-end side. We have a cross-asset implementation and offering from Refinitiv side, so provide a wide range of asset classes, markets, and third-party data. And one of the unique third-party data we have is Right Addition, which covers the alternative LIBOR rates. So how Refinitiv will be able to set a kind of unique offering for the technology part and providing a unique data feed to our clients. So going through some numbers, we have our data solutions and platform access are currently used by 10 out of 10 of the top 10 global banks in the market. And we have around 90% of the companies managing the revenue of 10 billion or more with us. And also we have a kind of partnership and feed methods delivered to more than 87% of the institutions, investors, to global research firms in the market. Just to go through a holistic view of what our deliverables and feeds and services provided from our platform, we have more than 40,000 customers around the globe using our data, and we have around 400 end users in more than 190 countries worldwide. We have also around more than 5,000 investment firms and hedge funds, and we have around more than 400 billion FX trading per day using our trading platforms and trading venues provided from our platform. And we have also more than 250 billion in bond trading supplied daily through our platform. Going back to the data part, we have more than 7 million price updates, which is provided per second to our financial markets. Going through the Electron data platform and using this same holistic overview that we have on our data Refinitiv platform, we have start with the data coverage, where we have an exclusive data sets, including market pricing, economic, company reference, risk and regulatory, and fundamentals data. And also we have a kind of aggregated data feed that we provide a market-leading breadth and depth, covering more than 80 million instruments from more than 10,000 sources. Also, we have a kind of unique normalized data. These normalized data are formatted for easy integration and identification by our clients. On the intelligent part, we are enabling the better market analysis and providing deeper insight for our clients to use it for a kind of machine learning and unique AI offerings from our side. Also on the delivery side, we have different delivery options with wide range of that we are addressing to our client needs. In terms of the support from Refinitiv side, we have the expert community, which is providing a unique access to more than 1,000 developers worldwide. And okay, so instead of going through the technology side, I would like just to give you also the idea on the wide range that we have on the real-time data sets. So we're covering almost all the data sets and asset classes, going through the fixed income part, FX, equities, news and events, covering our exclusive Reuters news and alerts. We have the exchange-traded derivatives, which is more than 2.5 million active options and 4.3 million active warrants. In terms of rates, we have our unique partnership with almost all the IDBs and brokers and data vendors worldwide, where we have an exclusive coverage and consolidation, where we are aggregating all the data rates coming from Refinitiv side as a contributed rates and also from our data platform. On the benchmarks, we have a kind of administration on the WMR rates coming from Reuters FX benchmark, and we have the exclusive for government and corporate bonds for India markets and other markets in Canadian and Saudi Arabia as well. So how our customers using our real-time data? Since we are talking about the rates for the risk-free rate packages and LIBOR transition, our focus mainly on the front and the back office. So we have the real-time on the pre-trade analytics and research. So our offerings covers any requirements for the data on the pre-trade. And also we have the back testing. Sorry, I think that you have a question. Okay. So I'll be able to answer the question to the end of the presentation, if you don't mind. So back to the presentation, where do our clients use our real-time data? So we're using the pre-trade to be provided by Refinitiv. Also, we're using our real-time unique and quality of data for backtesting and pricing discovery. And also the real-time data are used for e-trading and manual trading as well. On the back office side, we can be used for pricing evaluation and risk analysis, where we have a unique tick-by-tick information provided from our Electron real-time platform. So just to have a quick recap on the data concepts and benefits provided from the Electron platform, our unique and exclusive content provided through a unique content set. We have a wide range of fields and mapping provided from our platform. Plus, there is different types of data delivery and methods the clients can benefit from, and will definitely match their internal requirements and needs as well. We have a unique and consistent view. We can provide a kind of optimized for machine use and data modeling as well. So as a quick coverage on the exchange part, we have more than 500 exchanges globally. This is already consolidated and integrated in our single one platform Electron feed. And we have provided through a real-time streaming data with the least latency and also with the best quality of data from our platform. Going through the real-time delivery methods and how clients will be able to access our unique data plus traditional data provided as an alternative LIBOR rates. We have different sets of methods that clients can be used. So the first one and the unique part is TREP, which is a locally deployed infrastructure. And in this case, clients will be able to have this customer and internal management and administration of the real-time feed and the pricing engine. And they have all the capabilities and functionality and flexibility to integrate with their internal systems as well as Icon and other applications outside. The second option, which I think is provided as a unique proposition from Refinitiv, is the Electron as a service. And the term as Electron as a service is actually, it's a line of a generic collective term that refers to the delivery and for anything as a service. So we can call it for the infrastructure as a service, we can platform as a service. So the terminology is used for anything provided as a fully managed by the provider. And in this case, we recognize the vast number of products and tools and technologies provided from the local infrastructure. And in this case, it will be fully hosted in our infrastructure and data center provided by Refinitiv. We'll be able to increase the innovation. And also at the same time, we eliminate all the physical space, office space provided that was required by the clients, and also to have a less cost implication by the infrastructure side. So this fully managed service have the TRIP components will be implemented in a hosted environment in our data center, and we'll be able to fund and operate and manage all the equipment and feeds, platforms, and connectivity. So the customer can focus on their core business and also to make sure that they have the best quality and less latency on the data streaming. The last part, which is in line of the new trends in the market and the new technologies provided, which is the cloud technology. We have the new Electron real-time in the cloud, where clients will be able to use and rely on the standard cloud technologies provided by our partners over the contribution of the data and use content via zero footprint feed over the internet. This will be following the same technology that are provided and in partnership with Amazon, Microsoft, and Google as well. So thank you very much for your time. I have done my part. So back to you, Jamie and Nuno.
Sure. Thank you very much, Motaz. We have received a good number of questions, so that's great. Thank you very much for your participation. We'll try to answer as many as we can. And we'll start first, probably starting with the first one is, what is the difference in LIBOR and SOFR deriving methodology? For example, in the present context, and what is the difference in 3 months USD? Jameson, would you like to pick this one up?
Yeah, thank you very much, Nuno. So, I mean, this is quite. I mean, there's an easy answer for this, and there's a more difficult answer. I mean, the simple answer is that in regards to the two rates, LIBOR is a quote based rate. So essentially, firms submit the rate overnight as to which price they're looking to, or they will lend money at. And that's why it's been susceptible to manipulation in the past. The new rates, SOFR, are secured rates, so they're secured against treasury transactions. So actual transactions within a treasury market, and therefore, much less, or if I mean, I don't use the word impossible, but much more difficult to manipulate. So that's the real difference between the two rates. One's essentially submitted by banks on a daily basis. One's secured against actual transactions that have taken place within the markets. What I would say, and I mean this is going to be my answer to a few other questions as well that we've had, is that there are a number of questions which I guess are going to take longer than the time that we have left on this call. So what I would suggest is for Moritaz and the team to follow up, and we can set up calls with Tradition's quant team, who are responsible for actually formulating these rates, and that will allow us to go into much more detail.
Thank you very much. Maybe another question, and I think Motaz, you'll be able to pick this one up. What is the difference between Electron and Icon?
Sure, I can answer that, Nuno. So when we're talking about the data feed or an access to our data, you'll have two different channels and too many channels that clients will be able to access the data from. And whenever we're talking about a platform, we have a wide range of channels and communications can be used. So the data can be fed into an application used by a user, like a single or individual use. And we have the same level of quality of data to be fed directly into a system from the back end side, and the system can do a distribution. So if we're talking about Electron, is our primary and main platform, which is delivering and providing all the data points and the same level of quality of data to all the channels. This is including Icon application and also the systems or the infrastructure as well, using Track or Electron access to fit to the system. So for a short answer, Icon is the application or the user application, and it's connected to Electron. Electron is the primary platform where we have all the data and market data and real-time instruments provided.
Perfect. Thank you very much, Motaz. I think following another question, I think I will pick this one up. There's a question about the fact that there will be a change in terms of these curves and the new calculations that will be done in the systems for the new risk-free rates. So the question is, do we need to do some calculation on the rate to apply on commercial loans transactions, for instance? Is that a specific, it's quite a specific question. However, it really depends on the third-party systems that you currently use from a treasury management point of view, or where you actually source these data. So you're probably, your third parties that currently have those risk models or those valuation models will probably have to do some upgrades or some changes to cater for the new rates, if that's the case. However, in terms of digesting and absorbing the new data, as mentioned, from a Refinitiv and Tradition point of view, we'll be able to power and deliver that via Electron. Additional calculations, it really depends on the specific instruments, on the use case that you might do. It might be a new instrument, it might be an existing derivative that you do mark to market. So that will probably require a bit more detailed analysis to provide more, more accurate answer. But all in all, I think it really depends on the third-party systems that you currently use and the calculations that are currently being performed. Another question is, I think, Jameson, maybe you can pick this one up. Can we conclude that all parties who have existing contracts linked to USD LIBOR will be replaced with SOFR?
Yeah, thank you. So that's a difficult one to answer, in that LIBOR, no one really knows what's going to happen with LIBOR at the moment. Previously, firms have been mandated to submit rates overnight. Now they're not. So, the likelihood is that because the panel banks who submit these rates, they'll stop submitting them. Therefore, LIBOR will just disappear as a rate. And therefore, Nuno, you spoke at the start about, the amount of financial contracts that are linked to LIBOR, around 300 trillion. Those, you can't just have those rates exposed to an overnight rate which might or might not exist. So I would say that although there's no definitive guidance as to the actual future of LIBOR, what the firms and what these alternative reference rates and these these alternative reference rates committee are saying is that this is the new rate that we've chosen to be the benchmark for lending. And we're pushing firms to start referencing these rates. And we've already seen, we've seen a number of contracts that have been issued linked to SOFR. Volumes are increasing in a large way. So yes, I would say that SOFR is going to be the replacement for LIBOR, and that's been announced by the Alternative Reference Rate Committee. Thank you.
Perfect, thank you. There is actually a question related to Tradition's data. So will Tradition's data feed of SOFR, Esther, and Sonia real-time pricing, and the curves will be available for free for Icon users?
So the setup at the moment is that it's fee liable for non-display use. So if you're going to take the data from the screen and use it in your internal applications, again, whether that's risk management, price discovery, valuation systems, that's where you need to have a license in place. And that's also what we're giving away free of charge up until July the 27th. For Icon use, and if the data is just going to remain on your desktop and it's not going to be fed into internal pricing applications or internal pricing spreadsheets, then it's free of charge. And that Trad RFR page, you'll be able to access that now and on an ongoing basis. Hopefully that answers that question.
Thank you very much. I think there is another question just came in. Will the IBOR page be updated with the new risk-free rates post-2021 only, or it's an ongoing process to update the pages? So it's a very good question. So Refinitiv is definitely committed to enhance and continue updating that page with content as it comes available. So it not only in terms of what is available in terms of methodology and calculation, but also on the different terms that will come. So we're actually hosting a follow-up webinar globally coming at the end of June that you might benefit from attending as well. And I believe after June, you will see also some significant content being added to the page. So I think in short, answer is yes, the page will continue to be updated as the new, the reform unfolds and content becomes available. Jameson, I think you have another one to potentially answer. Is around the TraditionData richness for basis swaps data for GCC countries. specifically around Saudi and Bahrain.
Thank you. So the data that we have available is ever growing and ever changing. To give you an example, so this risk-free rate package, it started off at the beginning of last year, just including in SOFR rates. As we've had more rates announced and more alternative reference rates chosen, we've continued to add content to that package. So again, Esther, Honya, Sonia, we've continued to add to the package. And we're looking to continue to do that as well. So, if we look for the rest of this year, already planned, we're going to be adding, Tona for Japan, we're going to be adding Aonia for Aussie dollars, Sora for Singapore. So we're really looking to continue to add content as and when these packages have been announced. For the GCC region, we're seeing that being a developed process over time. I believe we're still waiting for the central banks to announce what these new rates are. So I think especially as and when these brokers, start seeing liquidity, they start seeing trades go through in these markets, then we'll definitely be looking to add those curves to the package. Tradition has a very strong offering. We've got an office locally based in Dubai, and we like to see ourselves as one of the leaders in those OTC markets. So I guess from a richness, again, being a leader in these fields, we have again a majority of trades that go through these markets. Tradition's brokers also facilitate, and therefore that allows access to again rich and accurate data. So I'd say keep an eye on the packages as well. Be looking at those, be looking at the current content, and over time you'll see additional content added as well. Thank you.
Thank you very much. There are a few more questions that are rather technical that I think will probably be better answered if addressed to some of our technical or quants that are kind of looking at the methodology and specifically looking at some of the long-term rates calculations. So probably that will require a separate session. Feel free to drop us an email and we'll address that on a separate session. I think in terms of questions, I think we have addressed most of them. I really appreciate the engagement. It has been extremely positive. I would just like to basically give a minute or so to Jamison and Motaz for any final remarks before we close the webinar.
Yeah. Thank you, Nuno. So from my side, again, just to mirror what Nuno said, very much appreciate the time. Thank you so much for that. What I would say is, Tradition has a number of different quants around the world who are, again, formulating these curves. Stuart Giles he runs the quant teams out of the US and is responsible for SOFR. We've already set up a number of calls with clients where we've had him attend that and again handle these methodology questions. So more than happy to do that. I'd say let's follow up after this call. Even myself and Motaz will engage with those who attended. And if that's something that's of interest to you, it would be an absolute pleasure to offer that service. So we'll be in touch, and again we can discuss further any additional points that you have. Over to you, Motaz.
Yeah, I agree with you. I really appreciated the audience and the attendance from our clients and partners. There will be a series of follow-ups to be done from our side and with our clients